All right, let's talk American Axle. This one was interesting. The stock pops over 6%, but wait, they actually missed on revenue. So what gives? How does that happen? Well, that's exactly what we're going to break down today. It's really a story about smart execution in a pretty tricky auto market. Let's get right into it. Okay, so here's how we're going to tackle this. First, we'll hit the big numbers from the quarter. Then, we'll dive into how they managed to pull off such a great quarter on the profit side. We'll also talk about the massive Dowlais deal that's changing the whole company, see what they're forecasting for the future, and then, of course, we'll wrap it up with our take on what to watch for next. All right, Section 1, the snapshot. And really, this quarter's report reads like a tale of two completely different stories. So here's the deal, plain and simple. On the top line, revenue, they missed what analysts were expecting. But, and this is a big but, on the bottom line, their adjusted earnings per share, they absolutely crushed it. This is the whole story right here. This is the paradox that got investors excited. And we're not talking about a small beat either. Look at this. The consensus on the street was for 12 cents a share. American Axle came in and delivered 16 cents. That's a whopping 33% upside surprise. That's the kind of thing that makes Wall Street sit up and take notice. And it tells you one thing very clearly. These guys are managing their costs like pros. So that top-line number, the revenue, came in at $1.51 billion. Basically flat compared to last year and just a tiny bit shy of what the analysts were hoping for. But here's the thing. Flat sales don't always tell the whole story. Sometimes there's a lot of strength hiding underneath. And this is what it's all about, right? The market's reaction. The stock jumped over 6% on the day. That tells you everything you need to know. Investors looked right past that small revenue miss and focused squarely on the profits. They basically said, we see you're executing and we like it. So that big question again, how do you beat earnings when your sales are flat? Well, that brings us to Section 2. It's all about one thing, margin execution. This right here is the magic number, 130 basis points. Now, for those of you who aren't familiar, that's a 1.3% improvement in their profit margin year over year. And let me tell you, getting more profitable when your sales aren't even growing, that is tough to do. It's just a masterclass in operational control. And you can see it right here in the table. Their adjusted EBITDA margin went from 11.6% last year all the way up to 12.9% this year. But what does that really mean? Well, it means they squeezed out an extra $20 million in profit from pretty much the same level of sales. That, my friends, is what efficiency looks like. And the real hero of the story was their core driveline business. The CEO, David Dowlais, he pointed this out on the earnings call. He said that specific part of the business hit a nearly 15% margin. Think about that. It's their best third quarter performance in 5 years. They are absolutely firing on all cylinders there. So you're probably asking, what's their secret sauce? Well, management laid it out pretty clearly. First, they sold more of their really profitable stuff. Think parts for heavy-duty trucks. They also got a little smarter with their R&D spending, saving a few million there. And it was just good old-fashioned cost discipline everywhere else. And what's really impressive is they did all this while keeping their debt levels stable. That's a sign of a really well-run company. Okay, so the quarter itself was great. But honestly, the bigger story with American Axle right now is what's coming next. And that all revolves around their gigantic, game-changing deal to combine with Dowlais. And this deal isn't just a fantasy. They are making serious progress. Look at this. They're just ticking off the boxes. Shareholder approvals? Done. Permanent financing? Locked in. They've gotten the green light from 8 out of the 10 countries they need it from. The only big ones left are Mexico and China. They're targeting a close in the first quarter of 2026, and it looks like they're well on their way. Just look at the last few months. In July, shareholders gave the thumbs up. In October, they got all the money sorted out. And just this month, Brazil signed off. Every single one of these is a major step forward. It shows you this deal has real momentum, and the finish line is getting closer and closer. So you might be wondering, why is this Dowlais deal such a big deal? Well, it's the heart of what they call their propulsion-agnostic strategy. That's a fancy way of saying they want to make money no matter what's under the hood. Whether it's a gas engine, an electric motor, or some kind of hybrid, they want to be the ones supplying the critical parts. And with everyone wondering how fast this EV transition is really going to happen, having that kind of flexibility is a massive, massive advantage. Okay, so let's shift gears and look ahead. What's management saying about the future? This brings us to their guidance and a really interesting trend in the auto industry that's actually helping them out quite a bit. So here's their updated forecast for the full year. They tightened up their sales range a bit, and more importantly, they raised the low end of their profit and cash flow guidance. Whenever you see a company do that, it's a clear signal. It means they're confident they can hit their numbers for the rest of the year. And this quote from the CEO really gets to the heart of what's happening in the industry right now. He's talking about an extended ice tail. Basically, that means the slowdown in EV adoption is forcing carmakers to keep building traditional gas-powered cars and trucks for longer. And for a company like American Axle, which makes a ton of money on those vehicles, that's fantastic news. It lets them just keep printing cash from the factories they already have.
All right, let's bring it all home. We've looked at the quarter, the strategy, the guidance. So what does it all mean for the stock? This is our take on what to expect next.
So, after a strong quarter and a nice pop in the stock, the big question is, what's the play for next quarter? Okay, here's our outlook. First, on the results, we think that margin strength is going to continue right into Q4. That profitable truck business should keep things looking good. As for the stock price, we expect it to hang around these levels, maybe even push higher if we get some good news on the economy. But the number one thing you need to watch, the biggest catalyst out there, is news on the Dowlais deal. Getting that final sign-off from China, that would be huge, and we think the stock would react very positively to that. So, with all that said, our rating on American Axle is outperform. I mean, look at the evidence. They are executing brilliantly on their margins. The huge Dowlais deal is on a clear path to closing, and the way the auto industry is shifting right now is playing directly into the strengths of their most profitable business. It's a compelling story. And that's our look at American Axle's quarter. It's really a fantastic example of a company executing well and playing its cards perfectly in a very dynamic industry. Just a quick reminder, of course, this is not financial advice, it's for informational purposes only.